We're here at the TCS house covering and decoding the TCS numbers. Now we have Mr. Rajesh Gopinath, MD and CEO, as well as N. Subramaniam, CEO and ED at TCS with us. Rajesh, let's start with what happened in Q1. One would say that Q1 is off to a low start, or a moderate start compared to what you would have thought earlier. Does this change the plan of achieving double-digit growth, which the company has always aspired? And, we saw similar trends last year as well, but then the pace picked up. Do you expect similar trend this year?
So definitely it's a bit of a soft start compared to where we were anticipating it to be. But our focus on double-digit growth does not go away. So we are relooking at what are the kind of levers available. And as I said, we want to wait till how Q2 plays out before we start commenting about what we'll do or what the full year looks like. But the more important part of it is that if you look at the individual strategies that we put in place to go back to double-digit growth, all of them are continuing to be very relevant to our customers. Whether it be the focus on digital as a core transformation agenda rather than just at the top, whether it be the focus on agile and automation, the entire integrated suite of Business 4.0, our products and platform story. Each of these is continuing to resonate very strongly with our customer set. And that is what led us to the double-digit growth. So we are quite confident that on the back of those strategies, we should be able to maintain the growth trajectory that we have achieved during the last year.
Right. In the earlier panel told us that there were some client-specific issues, especially in the banking space, especially in the retail space in various areas. Can you just elaborate on that? How do these things get resolved when you have seen such issues earlier?
Specifically to that question, there are a couple of issues that we think will go away, especially in the retail part of it. Banking, we need to wait and watch how it develops because it's slightly more broader than that. But more importantly, if you look at both these verticals, the kind of investments that are going in. So in retail, our Algo Retail product suite is finding a lot of traction. People are significantly investing in next generation supply chain management, store operations, integrating store with online channels so that you have an omni-channel presence. Our Optimera product suite, which is a pricing engine, continues to gain a lot of traction. We just closed it with Woolworths in Australia, with Petco in United States. So there is significant investment going in retail. Similarly, in the banking side, if you look at payment transformation that's going on, if you look at cross-border settlement on the capital market side, where our Quartz solution set is gaining a lot of traction in this space, we are seeing wealth management come back, and we got the Cellnet award for the work that we've done for Deutsche Bank. So there is significant investment going on both these verticals, and we are participating very well in that space. Short term, it's difficult to call, but it gives us a lot of confidence from a medium to long-term perspective.
Can you just also talk about the TCV deals signing, and especially the outlook on that, considering that macros are slowing down, a lot of, people are talking about pushing back expenses. How do you expect this trend to continue?
Our deal pipeline continues to be strong and expanding. So even on a sequential quarter basis or a year-on-year basis, our qualified pipeline continues to be higher than ever before. Deal signing, but there is a cyclicality to it. So if you compare Q1 to Q1, we are at 5.7 billion this quarter compared to about 4.9 billion the same quarter last year. So we see deal momentum, and we see good participation across new customers, both new customer addition as well as larger integrated deals in our existing ones. We are seeing good traction going into new areas also. For example, in Europe, in Finland, OP Bank has signed a digital transformation deal with us, a fairly large investment, where they're looking to convert their entire infrastructure into a hybrid infrastructure. So very strategic deals are coming, fairly large-sized ones, requires a full spectrum of knowledge across the application and technology stack. And I see that momentum continuing. I don't see that slackening off.
Right. Mr. Subramaniam, could you just talk to us about the 4.0 strategy? How is it progressing? How is it versus your medium-term goals?
We are pretty much on track with respect to what we wanted to achieve in using Business 4.0. I think our positioning as a growth and transformation partner, the Business 4.0 thought leadership framework is clearly working to deliver digital transformation for our customers. Right? Specifically in banking financial services, as well as in most of the verticals, the ability of Business 4.0 to integrate various digital technologies and give relevance to solve the business problems and position customers for their growth and transformation agenda has been phenomenal.
Right. Could you also just talk to us about any headwinds that you see at the current juncture? We've spoken about where, levers of growth can come in, but could you just talk to us about certain headwinds also that you see?
See, we have had a very good momentum in terms of deal pipeline and 5.7 billion this quarter. In banking financial services signed up close to about $2 billion in this quarter. And we have had the best of net additions for now over the last 5 years, right? So we are out there to capture the demand that we see in the marketplace. That's the first point that I would like to make. We called out certain soft spots in capital markets, in the banking financial sectors, certain clients in European market, specifically attributable to probably Brexit or other things, the way at least they see the macro situations. Okay, but barring that, we don't see any other situations at this point in time. As we engage with our customers, the kind of projects that we are executing with them, the kind of demand that they are projecting to us, and all this, when I see that, and it reflects pretty much in the deal pipeline, it reflects pretty much in the deals that we have signed. So I don't see any major headwinds beyond what we have already called out.
Right. Digital has been, of course, one growth area, but now it's 32%, 33% of the business, annual run rate of 7 billion. Do you still see opportunities for great YOY growth in that particular area?
That will continue. As NGS said, we are churning from the existing technology stack into a re-architecture of a new stack. Almost every single new program that is getting commissioned is in some form or the other involves leverage of this combined technology stack. So I see that continuing to be accelerating. In fact, we mentioned this in our annual report also. I think this distinction between digital and non-digital is becoming a bit moot, and we were debating internally whether we should stop calling that out, because it's much more difficult to now draw a line as to what is digital and what is not.
Right, but overall you continue to see demand over there being pretty strong?
Absolutely. So if you were to, I would think that going forward we should think about it as transformation demand and new investment demand, and that continues to be very strong.
Right. So if I look at the TCV deal wins, Q4 I think was the previous quarter was one of the best that you have done, and before that also the run rate was improving every quarter. Does that give you visibility at least for the next 3-4 quarters for a good growth number as those start to come in the revenue?
Absolutely, but these are fairly long-term deals. So typically for us in a given quarter, new customers contribute, or in a given year, new customers contribute less than 5% of revenue. So there is not much significant thing. What is more important for us is the strategic value of that pipe, because it shows that we are continuing to be relevant to customers and that we are competitive in the market and maintaining or increasing market share.
Right. Let's talk about the margins as well. So margins earlier used to be on a higher band, but now it's come down between 24, 25 odd levels. How do you see it progressing ahead? Will this be the new norm?
See, in the last, let's say 2 years, we put in together the broad set of strategies that will address the demand, that will capture the digital thing, and we have also invested in both workplace and workforce transformation, upskilling number of our employees, and so on and so on. So that right now our focus is to really go and capture that and leverage all the investments that we have done, right? At the same time, if we are working with customers, they want us to fire on growth, fire on innovation, fire on efficiency, all the 3 cylinders to them. The same thing applies to us as well.
That leads to more
as well. So at this point in time, while we continue to focus on the revenue trajectory and stay put in achieving the double-digit growth, the efficiency levers is something that we are also as a management team focused on. The top 10% of our team, our employees, we also managed to tell them that, look, okay, it comes that variable pay compensation is kind of moderated to match the softness, that unexpected softness that we saw in this first quarter, right? So that's something that's also reflected in the margins. So as a management team, we are extremely focused on staying there in the course on the double-digit trajectory, as well as achieving the margins given the currency where it is today and the direction it is taking.
Right. Rajesh, just one last word before we end. Now, two things have changed after the budget. One, of course, is the buyback will now be taxed at 20%. Does that change the capital policy? And secondly, there is a proposed shareholding norm for 65%. I know it's too early, but any thoughts on these two things?
So on the first one, the capital allocation policy does not change. Capital allocation policy is a call of what needs to be retained and what should be given back. The mechanisms of distribution needs to be evaluated, but the amount per se does not change. On the other one, it's really not our call. It's an investor-led decision. The company doesn't have anything to talk about.
Right. Thank you so much, gentlemen, for taking out time for us. Always good to get perspective. That was the MD and CEO as well as the second panel from the TCS house.